Look at this map of the world and ask yourself a simple question. Who really controls the dollar? Because right now, every single transaction, every trade deal, every major decision in global finance flows through American currency. But here's what most people don't realize. The power behind that green piece of paper isn't just sitting in the hands of politicians in Washington. There's a much deeper game being played, and understanding it could fundamentally change how you see global power. After World War II, the Bretton Woods Conference of 1944 gave America the keys to global finance. The dollar became the world's reserve currency, backed by gold. This wasn't just an economic decision, it was a power move. When your currency is what everyone needs, you have leverage over every nation. Countries had to hold dollars in reserves. International trade had to happen in dollars. Oil had to be priced in dollars. Suddenly, America had financial power that could shape entire economies without military force. This system created what economists call seigniorage, the profit from printing money that the world needs. For 80 years, this has been the foundation of American global dominance, generating enormous wealth and influence simply from the privilege of having the world's reserve currency. Here's what most people don't know. The Federal Reserve, which controls the dollar, is a private institution owned by member banks. It's not a government agency in the traditional sense. The Fed controls interest rates, manages the money supply, and determines how much money flows through the global economy. When Jerome Powell makes decisions about interest rates, he's affecting billions of people worldwide. A single rate hike can send emerging markets into crisis. A rate cut can fuel global inflation. Yet the people making these decisions are largely unelected and unaccountable to the public. The Federal Reserve answers to Congress nominally, but day-to-day operations are controlled by a board of governors and regional bank presidents with tremendous autonomy. Let me give you a concrete example of how this power works in practice. In 1997, when the Asian financial crisis hit, the Federal Reserve and the International Monetary Fund essentially forced Thailand, Indonesia, and South Korea to restructure their entire economies according to American financial principles. These countries had to privatize public assets, cut social spending, and open their markets to American corporations. The IMF, which is dominated by American voting power, made these demands as conditions for financial aid. Millions of people in those countries lost their jobs, their savings, and their economic security. But American investors got to buy up assets at fire sale prices. That's the real power of currency dominance. It's not just about exchange rates. It's about who gets to make the rules when crises happen, and who profits from those rules. Currency control is really about who gets to make the rules and who benefits from those rules. If you're starting to see how power actually works in the world, you need to keep watching. Because the dollar's dominance isn't unchallenged anymore, and understanding what's happening right now could change everything about how you see global politics and economics. Don't miss what comes next. This is where the real power struggle becomes visible. Over the past 2 decades, countries have been actively working to reduce dependence on the dollar.
China built the Belt and Road Initiative, creating economic ties that bypass American financial systems.
Russia, facing sanctions, moved away from dollar transactions. The European Union created the euro and an alternative to American dominance. These are calculated strategies to shift global power. When countries trade in their own currencies instead of dollars, they're saying, "We don't need you as much." Now look at the map of the Middle East and Asia. Saudi Arabia, the world's largest oil producer, has started accepting other currencies for oil sales, particularly the Chinese yuan. If oil stops being priced in dollars, countries won't need dollar reserves anymore. Without that need, they don't need American financial protection or political influence. The petrodollar system, which has been central to American power for 50 years, is being challenged. Here's a statistic that should make you think. According to data from the International Monetary Fund, the dollar's share of global foreign exchange reserves has declined from 51% in 2000 to approximately 58% today. Now wait, you might be thinking, 58% is still a huge majority. That's true, but the trend is what matters. That decline happened over just 2 decades, and the pace is accelerating. Meanwhile, the Chinese yuan has grown from essentially 0% of global reserves in 2000 to over 2% today. That might not sound like much, but it represents a fundamental shift in how the world conducts business. Every percentage point the dollar loses represents trillions of dollars flowing into alternative systems. Currency dominance is the invisible infrastructure of global power. It's how one nation projects influence without armies. It's how sanctions work. It's how wealth flows from poor to rich countries. When the IMF forces developing nations to accept loans in dollars, they create dependency. That nation must earn dollars to repay debt and align policies with what dollar markets want. They lose economic sovereignty. This game has worked brilliantly for America for 80 years, but it's changing. The implications of this shift are staggering. Let me break down the cause and effect chain. Right now, the United States can borrow money at incredibly low interest rates because the world needs dollars. American treasury bonds are considered the safest investment on earth because they're denominated in the world's reserve currency. This allows the US government to run massive budget deficits without immediate consequences. The government can spend trillions on military bases, weapons systems, and global operations because it can borrow at favorable rates. But here's the chain reaction if the dollar loses reserve status. First, countries stop needing to hold as many dollar reserves. Second, demand for treasury bonds declines. Third, interest rates on those bonds rise because sellers need to offer higher returns to attract buyers. Fourth, American borrowing costs skyrocket. Fifth, the government has to choose between cutting spending or printing even more money, which causes inflation. American consumers see their purchasing power decline because imported goods become more expensive. And seventh, the military-industrial complex that's been funded by this system has to shrink because the government can't afford to maintain bases in 150 countries anymore. That's not speculation, that's basic economics. The entire architecture of American global dominance depends on the dollar remaining the world's reserve currency. New technologies are emerging that could accelerate this transition. China is developing a digital yuan that could allow international transactions without going through American-controlled banking networks. The European Central Bank is working on a digital euro. Blockchain and decentralized finance are creating alternatives that bypass traditional systems entirely. The power struggle over the dollar is the power struggle of our era. It determines which countries rise and which fall, who gets wealthy and who stays poor, which systems survive and which collapse. Unlike military wars, this war is invisible. It happens in central banks and government meetings behind closed doors. But the effects ripple out to touch every person on Earth. Your financial choices, the currencies you hold, the economic systems you support, it all matters. Awareness is the first step to having agency in this world. If you want to understand how global power actually works, subscribe to this channel. We break down the hidden systems that shape our world, and watch the next video